Good morning, everybody. It's Chris from Serene Education with the 4 major notes update for the 3rd of April 2013. Hi guys, hope you had a fantastic trade day yesterday. How things progressed yesterday on the daily? Negative indeed. Price still finding or hesitating under that 12,900 mark yesterday, and as long as we maintain below that, there was always likelihood for price to maintain to the downside. And sure enough, you can see that we had hesitation yesterday and a spinning top, but more. You can see if you just look at that candle yesterday on the daily, you can see that there was more price action at the bottom of the 50% range and coming at the underside of a price support and resistance level, a major one in the shape of the institution. The templates overall still telling us we should be looking for selling opportunities, and this morning on the Asian session we have seen price falling lower. So on our 4-hour chart you can see that the momentum is severely dictated by the downside, and as long as that maintains, then we should be looking for further lows and preferably roughly towards that prior support and resistance level. If I can get it up on my daily, I'll just show it to you. There we go. This consolidative range here, roughly around the 1275, 1270 mark. Go for the 1270 in particular, but 1275 is a good one. Start seeing consolidation as we head into that. So back to the 4-hour, you can see this upswing, the intermediate upswing. Price is testing it right now. We have an indecision candle. The prior 4 hours. However, the 4 hours that is playing now, the candle that's in play now, which will close at 9 AM GMT this morning, is still looking very much negative. So we should be looking for negative sentiment, and if that's the case, then we should be looking for lower lows. As it stands now, the fib projection from the 4-hour chart, the move down, the consolidation over yesterday, and then the drop through last night. We should be looking back towards that 1275 to the downside. So hourly chart still negative, institution above price, swing lows telling us, yep, sentiment still looking negative. So we should be looking to the downside as our target. Look at any fundamental news today, guys. We're going into non-farm payroll, so we're going to see a bit of skittishness out there. What do we have? We have the CPI flash estimate year-on-year figures. Otherwise, it's pretty quiet for the European side. And look at the US news this afternoon. We've got ADP non-farm employment change figures. Remember, as we go into non-farm payroll on Friday, we are going to see these figures coming out today, especially tomorrow, and of course on Friday, which is a long weekend for most of us as we don't trade non-farm payroll. But we have the US crude oil inventories, the weekly results. We have the non-manufacturing PMI results, and then this evening we have a FOMC member Bullard speaking. So a lot of news for the US session this afternoon. So as it stands at the moment now, you should be looking for further shorting opportunities on the euro US dollar, as everything's pointing south for the foreseeable future. On to sterling. Huge fall from grace. Let's look at that weekly chart just to show you the sentiment. Moving now, we have this very indecisive candle at the underside of a major support and resistance level, and sure enough, we're seeing price kicking off to the downside. So a weekly is pretty much building up a picture as I always presumed it would. We're looking at the price support and resistance level here at 15,300 on our weekly, monthly, very strong through 2007 right through to currently 2013. However, this near-term support just failed to stack up. Price broke right through it, and eventually we actually ended up rallying down to the next support and resistance level here in the shape of the 14,800 mark. Consolidation, price bounce. So what we're seeing potentially happening now is a breakout that we saw here in February, and now we're seeing that pullback, and now subsequently we're seeing that failure now at the underside of a major support, which is now likely to be a new resistance, and now price is kicking on further. So we should be looking for nothing more, guys, than shorting opportunities. Please be aware of that. We are still trading in a very negative trend for sterling. You can see on my daily, everything's looking negative. Our sentiment on my template is telling me I should be looking for nothing more than shorting opportunities, and you can quite clearly see that prices actually failed yet again as we headed into that 15,300. Here again at 1525, a lot of selling coming through, bearish engulfing candle on the daily, cancelling all of this indecisiveness, all this sideways motion that we've seen here over the past couple of weeks, and now heading back towards those downsides. What we need to do near term is get below the 1505. You can see consolidation here along a number of occasions. So get below 1505, and then we're trading into cleaner air towards that 1485, which happened to be that weekly price support and resistance. Get below that, then it's curtains for this particular pair as we head down to our next level, which is roughly around the 14. Let's have a look here, 14,300. and then all importantly way down towards those 2009 lows at 13,500. So there's a lot of scope here for some positiveness. And you can see on my 4-hour has where price is trading now in real time. So ideally, if you're looking for a trade, let's get below that institution moving average. Let's get below that 1505, and then let's go towards that all important 1485 to the downside. As we get below the institution, you can see that everything's looking fantastic for shorting opportunities, but we don't short into a major institution because we've done that before, and we'll look what happens. So very, very important. Bide your time, wait patiently, get below 1505. You can see consolidation at the moment now, very hesitant, a lot of wicks, hammers, and 1505 has been a problem in the past. So get below that on our hourly particularly, and then we'll start trading some very less noisy waters, or less choppy waters to the downside towards that 14,800 mark. On to the US dollar Swiss franc. Let's have a look at this weekly chart. Looking bullish and very hesitant though. My only concern, and I mentioned yesterday, is the fact that price actually broke out of this consolidative range here at the 940 some time ago, and it's now procrastinating once we've got above it. Not really good last week in particular. You could see that we should have actually seen this pullback, then the actual follow through. Price maintained still above 940. It should have headed up last week. It did touch it. So I'll go to the daily just to show you that. There we go, the momentum going into that price of one resistance level, but then getting above it and going, well, what do I do now, and move sideways and subsequently back towards this trend line. It's still, however, above the 940, which is still constitutes to positiveness. We're still seeing a lot of growth in the US market, and there seems to be a lot more movement with the US dollar against most of its cross pairs. So as long as it maintains, in my theory, above 940, we should still be looking for those opportunities to go north for the spring. Okay, so as long as it maintains above 940, we should be looking upside. Ideally, we like to get out of this consolidative range. The more it procrastinates in this area here, the more I'm starting to get that very uneasy feeling. What we could do is project potentially an RSI just to confer that. Okay, so I plot my RSI, and you can see how price is. See, this is the problem that I have. I mean, RSI, the relative strength index, plots positiveness. If it's above 50, it's good. If it's below 50, it's negative. Okay. However, I look to see how that momentum is moving. Here, I mean, we're here sitting above a prior support and resistance level back in November. We have been here, and you can see how RSI is pretty much falling off. I mean, we've had an attempt here on this day here, this reattempt, which is higher than that attempt over there. You can see price is moving higher. I can do that just to show you. However, it's not the same. But remember, we're still above the 950. I mean the 940. If this is to be genuine or indication that price is now looking top heavy, and we should be looking for an opportunity to sell, we would need to see price falling below that 940, because 940 happens to be a major support and resistance level psychological for all the traders out there. As long as we're trading north of the institution, we should be looking for buying sentiment. If we're trading south of the institution, then we're looking for selling sentiment. So as it stands at the moment, our RSI has lost a bit of pace, and that pretty much shows because price is just going sideways. The last attempt was higher than the previous one that we had in March, and the RSI has dropped slightly. However, you can see near term price is still making those attempts to the upside. Okay, so it's important for price to continue maintaining the bullish outlook. We need to see price getting above this 955 mark in particular. It's so important, because that constitutes a lot of resistance here. So if we get out of this, RSI still maintains about 50. It's still positive. Happy days. We head up. We end up going further to the. We should still looking for the upside. However, if the US dollar continues to still show a bit of negativity against the Swiss franc, then we should be looking back towards that 940. So looking for a daily bearish engulfing candle here at 950 would constitute that we should be looking to those levels at 940 for the foreseeable future. And remember, we're going to non-farm payroll. We've had some fantastic figures for non-farm payroll for the US market. We've seen a lot of growth, less unemployment, etc. So it'll be very unlikely if we do see a very negative unemployment figure yet again. So that's, I think personally, is going to see us moving above that 955. I could be proven wrong. RSI is moving sideways, but it's just consolidating, and sure enough, price is doing exactly the same. It's still above 940. Don't get me wrong, it's still positive. And our temper tells us we should be looking for buying sentiment, but we're in this consolidated, very wicky. I just have to show you the 4-hour what it's like. Not a really great trading range, very indecisive. Before then, more of a trend. You can see that So a lot of skittishness here, a lot of choppy waters. We don't want to trade choppy waters. So this is a great thing about it. We either want to see price trading above 955, because the further away from the institution, further away from 940 it is, the more likelihood this is a genuine trend, and we could look to actually profit on that. However, we remain within this 955, 940 band, then we should be looking for choppy waters still to maintain, and we're still looking for price to be quite volatile to the north and to the south within this range. So rather like to see 940 being breached to the downside to tell me you should be looking for nothing more than selling opportunities in the US dollar, or get above that 955, cleaner air, far better to trade. Particularly it'll probably be the start of a new trend to the upside, and then we can actually profit quite clearly from that. Last but not least, the US dollar Japanese yen. Very interesting one, this one. And in terms of what price is doing now on the daily, 940, the 9400 mark is a 38.2 fib retracement of our monthly highs, well, way back to 2007 in particular, right down to the current low that we saw last year. And the 87 there on the black line, you can see that's our 23.6. So price really rallying over the last couple of months, since August in fact, for this pair. And the US dollar really moving towards that 9400 through January and February, but coming unstuck at that 9400, which was, excuse me, a 38.2 fib retracement. Getting above it in March, and not hitting any higher though. I mean, this one very similar to the US dollar for Swiss franc. I'm not too sure what's happening now with the US dollar. She seems to be procrastinating now, and we have seen a price moving sideways for a couple of weeks, which is concerning because of the fact that we actually made all this headway over the past couple of months. And for the US dollar and Japanese in particular, we've seen the past couple of days, in fact last week, trading very indecisively. A lot of spinning tops and dojis at 9400, which is not a clear sign as we get back to this, because previously we had the breakout and then price pretty much went sideways, and then we expect that because you always expect some sort of pullback to occur in a breakout. I mean, the 9400 has been a major support and resistance level in the shape of that 38.2 fib retracement on our weekly, and so subsequently resistance was found. But when we did get the breakout, we expect to see the pullback, which occurred, and then the bounce. Well, it didn't bounce, it just didn't continue through. And in fact, it actually went up to the price support and resistance level, and then we had this bearish engulfing candle on the 21st, which took away everything, and subsequently price had to revert back towards that 9400. But once we hit the 9400, we expected prices to consolidate. Sure enough, seeing spinning tops and dojis would be one part of that, as the hesitation or the indecisiveness follows through. But then we wanted to see if this is to be a true major prior resistance, to be a true support near term. We wanted to see a bullish engulfing candle. That wasn't the case. We had a doji, then a decision, indecision, decision, and then we had this breakout on the 1st of April. A typical April Fool's break. And then we're now seeing price now pretty much very indecisive at the underside. So is this going to be our indicator that we should be looking for negative sentiment in the US dollar? Question mark. But I'm going to have to take it for what it says in the chart, and if it's trading below the 94, then there's more likely to be one of the selling opportunities intraday. The fact that this was a major support and resistance level for so long, we have to take on board that it's negative. It's a negative signal. We made all this made all this ground. We should have actually seen price moving up. That wasn't the case, and now we're below it. And in fact, it's below the 20 and the 50 as we speak. So not really good. So as long as it maintains below 94, guys, I'm afraid to say this, but we have to should be looking for selling opportunities for the US dollar. And if I go to the 4-hour chart, you can quite clearly see that we have seen lots of lower swings over the past couple of weeks, as price is now being pushed to the downside. And doing so, trading below the institution, and there's that 940, the 9400 mark, which is our 38.2 fib retracements on our weekly and monthly charts. We're trading below it. A lot of selling from April down, and then consolidating here at 92.50. A hammer, nice juicy big hammer, and then we had a bullish engulfing candle to confirm this was in our support, and sure enough, prices moved back up again towards the 93.50 mark. Now it's at 93.50, which is the 23.6 fib retracement from the all-time higher that we saw, the breakout to the current low. See the bounce, so 23.6. Get above the 23.6, then look to target the 9400. Failure to stay above the 23.6 at 93.50, then we should be seeing price reaffirming the negativity and then trading back to the downside. Okay, remember we are trading before it was a major support. Now we've seen the breakout. This could constitute to a major resistance level as we head back into that 94. Breakout, pullback, continuation in the direction of the breakout, which is negative. Sentiment is negative on the top and below, so it's telling us it should be looking for negative sentiment. The institutions above price, which is also a very negative indicator. So as it stands now, remember though, we're going into non-farm payroll this week. We have a lot of juicy figures out tomorrow in particular as we head into that Friday, and we've got to be well aware of it. For those of you who like to trade speculative, then non-farm payroll, or leading up to non-farm payroll, is quite interesting for you guys. But we have a lot of information out tomorrow in particular, especially in the US session. We have unemployment claims, the FOMC, there's loads of FOMC speakers tomorrow, including Bernanke, which there again, people just jump on and try and decipher what is likely to happen. But we're going into Friday, and we have those non-farm payroll figures. They're expecting a slight, they're expecting a less figure. I mean, last month we had 236,000. They're expecting 201,000. So they're expecting a less figure. If it comes out less than 201,000, then yes, I suppose these breakouts to the downside for the US dollar are genuine. If it comes out higher than 201,000, then expect the US dollar to rally. It's not a good figure that the actual forecast is less than the 236 that we had last month. It's not a good sign. We have seen a lot of growth. You would like to see that follow through. Is that the case? That remains to be seen, because if I'm sitting here talking about it, then I'm speculating. Rather wait to the... But as it stands at the moment, my charts are telling me that we should be looking for weakness on the US dollar, because we are trading below major support and resistance levels. This is for the US dollar Swiss franc, and this is for the US dollar Japanese yen. Okay, so take that on board. Trade what you see on the charts. On the charts, it's looking negative at the moment because we're trading below major support and resistance level. Trade what the charts tell you. Okay, so I'm going to leave you on that note. Otherwise, have a fantastic trading day. Enjoy the weather. We are seeing some fantastic weather here in Wales. But most importantly, please be aware of any news announcements out there. We are going to see a bit of news this afternoon. However, if you are trading the Serene Education strategy templates, please abide by the rules and back it up with sound money management. Okay. For all of those last night who joined us on our webinar, hope you enjoyed what you saw. Those particular templates for our MT4 platforms will be available at the end of this month. So if you haven't, or if you are interested in what we have, please drop us an email at customerservices@sereneeducation.com, and we will send you an email relating to those strategies. Fantastic strategies that we use on our Metastock platforms. For those individuals who cannot afford the price of Metastock, we have now coded so that you can actually use them on MetaTrader 4. So if you're interested in that, please drop us an email and we'll get back to you as soon as possible. Otherwise, have a fantastic trading day, and I'll see you first thing tomorrow morning. Until then, you guys trade serenely.